Right, so hello and welcome to the Assay. Today I am happy to be joined by Luke Alexander, President, CEO, and Director at Newcore Gold. So, Luke, thanks for joining us again.
Yeah, great to see you, Amy. Hope you're having a nice summer.
Absolutely, you as well. And it's always great to catch up, although it has been a few months. So I thought maybe we could just start with a brief overview of Newcore Gold and your Enchi Gold project.
Yeah, so Newcore, we're TSX listed. We also trade on the OTC. We're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by very robust economics that we put out in a PEA in 2024. We're now in the process of moving the project from a PEA stage to a PFS, which we'll anticipate having completed by the first half of next year, 2026. And then beyond that, we're in the midst of a 35,000 meter drill program. So we're looking to unlock a lot of the value that sits within our district scale exploration across the project. So development stage company with district scale exploration layered on top in a tier one jurisdiction, Ghana.
And so, since we last spoke in early May, you've announced additional results from the 35,000 meter drill program that's currently underway. So, before we jump into those results, can you summarize some of the objectives that you want to achieve with this current drill program?
Yeah, so the 35,000 meter drill program, we initially kicked that off as a 10,000 meter program in Q3 of last year. On the back of a very successful $15 million financing, we expanded that to 35,000 meters. With the 35,000 meters, a component of it is focused on resource conversion, so taking ounces from the inferred category to the indicated category. That's one of the key requirements to move our project from a PEA stage to a PFS. It's that de-risking of the ounces. So we've been focused on that. And at this stage, we feel we've completed the drilling required to convert those ounces. And then beyond that, we're looking to expand the overall size of the resource across the project. So focused on stepping out at our existing resource areas and looking to expand those, pushing a number of the holes deeper on our project, which then obviously deepen the overall size of the pits and add ounces that way. And then we're also going back to previously drill tested areas where we've had a lot of historical success that warrant additional drilling that we're going to focus on. And then lastly, we've got a diamond rig on site and we're excited to be drilling some additional deeper holes on our project. If you look at a number of the other mines along the Sefwi Bibiani belt that all sit at 5 million ounces plus, where a lot of those really grew in size and increased in grade is as they started to grow the overall size of that underground resource. So we're really focused on a number of areas of resource expansion, but also converting those ounces to be able to put us in a position to put that PFS out in the first half of next year.
Okay, excellent. And so going back to some of the drill results that we were talking about earlier, I thought we could, go through them, starting with Boin. So can you talk about some of the highlights and the key takeaways from those results?
Yeah, so in May, I think since we've last spoken, we put a couple of sets of drill results out in May 7th. We had some very strong results from our Boin deposit. Highlight holes would include hole 352, 2.25 grams over 56 meters, so 100 plus gram meters within that hole. So very encouraged by those results within that hole. Also some nice high grade intercepts, including 3.8 grams. So we continue to see that high grade on our project. And then, later in May 20th, we put out some additional drill results. And these included some nice high grade intercepts, including 4.4 grams over 24 meters. But within that, we had 9 grams over 10 meters. So again, nice high grade intercepts that show that potential to expand the resource ultimately at depth as we continue to drill. Within that May 20th press release, we also intercepted some nice wide zones, 1.52 over 52 meters. What's important to highlight with all of these results is that they're still relatively shallow on our project and should be captured within an open pit mine, which obviously make those ounces much more economic than the deeper ounces that you'll see across other projects. So extremely good results in May, and then we followed those up with some additional results recently.
Okay, excellent. And so, looking at some of the more recent drill results, you announced earlier this month. So, looking at the drilling that was done at Sewum, can you provide some of the highlights and key takeaways from those results as well?
Yeah, so the May results that I was just talking about were from our Boin deposit, which is our second largest deposit. Very pleased with those. Sewum is our largest deposit, and we recently put some drill results out on that. They were focused on shallow mineralization in an area we call Checkerboard Hill. It's an area that's about 250 by 800 meters in size. And we were focused on, again, intercepting some shallow mineralization. So these holes intercepted, basically at surface or near surface mineralization between 30 and 40 meters in width. And if you look at those results that we put out, you'll see a number of them came in above the average grade at our Sewum deposit. So really pleased with these, and they were focused on a lot of them were focused on resource conversion, but we then also pushed a lot of them beyond the existing pits, which should add some resource expansion as well. So those were the most recent results that we put out at our Sewum deposit.
Okay, excellent. And so, as you mentioned at the start of this interview, you're currently focused on taking Enchi from a PEA steady stage to a PFS in 2025. So, can you provide us with some of your ongoing developments that are related to advancing this PFS? So, what makes Enchi a technically straightforward, attractive development opportunity?
Yeah. So if you look at the PEA that we released in the middle of 2024, it outlined a very simple open pit heap leach operation. In terms of the economics, they're very robust economics. If we look at it at a $3,000 gold price, and I would encourage anyone watching this to go to our website, look at the presentation. It has sensitivities at multiple different gold prices, but let's use $3,000 given where gold's been trading over the last few months. The project produces an after-tax NPV of 970 million, after-tax IRR of 136%, and less than a 1-year payback. So very strong economics, which that compares to a market cap today of around 100 to 110 US. So our view is that moving it from a PEA to a PFS, you typically get a higher multiple from the market because you've ultimately de-risked it. We've talked about the infill drilling, converting ounces from inferred to indicated. That obviously de-risks and gives more confidence in those assets. Or in those ounces. We're also doing a lot of additional de-risking work on the project. So it's a very simple open pit heap leach project that then drives tremendous economics for the overall project. So we're excited, and that's the motivation to be re-rating it from PEA to PFS.
Absolutely. Okay. Well, it definitely sounds like there's quite a lot happening on that front. So, in tandem with the development work that you're doing, with Enchi's district scale potential, what kind of upside do you see from further exploration work across this property?
So looking at our Enchi project from an exploration perspective, we've got a very large land package, 248 square kilometers in size. From the northern end to the southern end, it's about 40 kilometers in length. And where we see the mineralization sitting on our project, as well as Chirano to the north of us on the Sefwi Bibiani belt at 5.5 million ounces and growing, Bibiani at 6.5 million ounces, and then Newmont at 20 million ounces and growing, is you get the second and third order splays coming off of the main Sefwi belt. If you add up the strike length of all of that, we've got about 100 kilometers of strike coming through our project. So we've got true district scale exploration. To date, we've probably only drilled on about 15% of the overall project. We then also, the average vertical depth of the pits that constrains our resource today sits at only about 75 meters below surface. To put that in perspective, Chirano, directly to the north of us, is currently mining at 800 meters below surface, so 10 times below the average vertical depth of our mineralization today. So we've got lots of exploration to go after. We are systematically continuing to step out and target our existing resource areas, but then we're excited to have a diamond rig on site to be able to start testing some of these deeper shoots that we've identified across our project. I talked about some of the higher grade hits within, the May 20th release of 9 grams over 10 meters. So those are the types of intercepts that we'll obviously want to go and follow up on and continue to grow that mineralized footprint with the goal of over time wrapping a resource around it and showing that expansion beyond what we've got today.
Okay, sounds good. We'll definitely have to, follow up with you soon to hear more about it. Looking at financing, can you talk a little bit about how Newcore is positioned for the next stage of development?
Yeah, so we're well positioned. If you look at our most recent financials, you'll see that we had 15 million, 1.5 of cash in the bank. We did a capital raise in February. Well, it was closed in February of this year. That was very well backed by deep-pocketed, long-term focused institutional investors who recognize the tremendous upside of our project from a development perspective, but then that torque that the project creates from an exploration perspective. So that was a very successful financing. We then also have warrant proceeds that currently are in the money. So we have about $3.5 million of warrant proceeds that we expect to come in between now and September, and those have started to trickle in already. And then if we look at between now and February of next year, there's an additional $10.5 million of warrant proceeds that we expect will come in, assuming the market doesn't roll over. So we're very well financed. Everything we've talked about in terms of the 35,000 meter program, the completion of the PFS, the additional de-risking work that we're doing, that is funded with that initial 15 million that I've talked about. And then obviously with warrant proceeds coming in, that will allow us to look at expanding the drill program as well as, pushing the project from PFS and closer to a production decision.
Okay, excellent. And so just to wrap it up, can you share anything that investors should be on the lookout for over the next 6 to 12 months?
So we've completed to date about 24 of the 35,000 meter drill program. So that's about 70% of the program. So we've got about another 30% to go. Those results will continue to come out over the next 6 months. So look for lots of drill results. We're also doing hydrological work, geotech work, some additional environmental, social work. We're also doing some additional met work. So as that gets completed, we'll look to put that out to the market as well. And then a big catalyst for us is obviously in the first half of next year, we're looking to get that PFS released to the market. And if you look at the positive impact we had when we put the PEA out, we're looking for a similar impact once we get this PFS completed. So lots of news flow from that perspective over the next 6 to 12 months.
All right, sounds great. Well, we'll definitely have to catch up soon, hopefully in person, if not online. But Luke, thank you for joining us here today at the Assay.
Yeah, thank you very much, Amy, and enjoy the rest of your summer.
Thank you. You too.